Hi, everybody. Good morning, and thank you so much for taking the time to be here today. I'm just gonna go into full mode screen. There we go. So thank you so much, everybody, and please remember that I love your questions. So definitely send them over. I don't see my question area here open just yet. I don't know if that's possible to open up so that, oh, there we go. Super. So as we continue through the presentation, please send me your questions so that I could talk with you guys, and let's begin. So I am Marina, the trader chick Villatoro, and I like to call my trading, I simplify day trading basically, because I've really just simplified it for my own reasons, almost like a feng shui of your house. I did that to my day trading, and it truly just kind of helped me become a much better trader, way less stressful, and just enjoy the process so much more. So today I'm going to be talking about 4 specific steps that I use for my trading, but mainly I'm going to take you guys into the live chart room, and so we could start to just watch what I see during the market, and hopefully it will help you also be able to see the market and understand it. And maybe if you have questions and any struggles that during the live market, please send that over to me. I'm going to do a quick intro of who I am and my background and whatnot. So today basically I'll be covering market movements, using the indicators and reading the live markets and spotting them for trade setups, and talking about scalping. I am a scalper, and scalping strategy had actually completely changed my entire day trading and my mental state, which I'm sure all of you know. Day trading is probably 80 or 90% your mental state and how you control your emotions over the actual skill of trading. I always say that anyone can actually learn to trade, but when it comes down to trading, and your mind can really start to play games on you. And I found that scalping just really minimized that stress and that doubt and all the other emotions that we go through. So I'm going to get into that a teeny bit later on. Okay, so who am I? Right now, I am an expat living in Antigua, Guatemala. This is my family. I'm married to a Guatemalan. However, we've been living in Central America for almost 18 years. Both of my kids, one was born in Costa Rica, the other one in Guatemala. Just a little fun fact, I am trilingual because I speak Russian fluently because I was a refugee from the USSR over 41 years ago. So it is my mother tongue, although it's probably not my best language. English, because I was raised in the United States from 6 years old. And I speak Spanish fluently as well because we've been living in Central America for 18 years. However, I do have a lazy household. Me and my husband only speak to each other in English. I do speak to my kids in Russian, though, so I do try and maintain that. Before I became a full-time day trader, I was a fitness instructor and a travel writer. So I still do this. I'm really big into traveling, especially with my family. I met my husband traveling when I was backpacking for a year and a half throughout Latin America. So I started Travel Experta way before I became a full-on trader, and I still run it. I still, one of my joys, because with day trading, I have the capability of traveling, trading while I'm doing that. So it's a really cool outlet for me as well, and I get to work with a lot of really fun destinations, hotels. So before I jump into the live market, I do have a special announcement. I know that many of you guys love to go to seminars and, participate and meet, different traders. I am actually speaking at the Money Show in Dallas, and it's from the 13th and the 14th, and it is completely free. There's going to be over 50 different traders there, people in the finance, all 100% free. Just come and enjoy the show. And please register. You could register. You do have to register before you get there because it is limited seating and space. So thetraderchick.dallasmoneyshow.com, and just register for free. And that is the way to get in. Okay, so The way I trade is I like to get back to the basics because one thing I have recognized is that it's too complicated. I spent over $20,000 and years of studying under mentors, academies, you name it. And I'll be honest with you, I've had quite a few issues because the majority of the times I'm noticing and I've seen, and now to this day, even when I speak to many different traders, a lot of people teach you their strategy. And the thing is, their strategy is their strategy. It's great to be able to teach how they see the market, but the goal is for you to be able to own that market. And that begins with the basics, right? So if you want to play the piano, you can't sit down and play a Mozart sonata without actually learning the notes first. You're still going to play Mozart, and most likely you're going to have a style that your teacher is giving you, but you're still going to be able to own it because you know the notes that you're reading, you understand the scales, and you know how to work with it. And that's something I noticed that wasn't happening. So every time I was asking, oh, but can you please explain to me how to spot a support area, or how like to spot like when the end of the trend is coming, and every time it was like, well, how could you not know this, or well, you should just be looking for this. But you want to be able to fully understand what it is you're looking for and why it is happening. And I realized after I had a massive loss, I've had many losses, but this one kind of blew my account entirely. I lost over $6,000 in the span of 3 days because the first day I lost all my money because I was just, lost the money. It was terrible. I didn't have a real structure. It was a real strategy. I was looking for my mentor's trades and they weren't happening anyhow. So after I lost that money, instead of just stopping, what did I do? I went into revenge trading mode. So another 2 full days of trying to get that money back, making me lose another $2,000. It was terrible. It was horrible. It was over 5.5 years ago. I'll never forget it. I was laying on the ground, completely defeated. And my husband standing over me, he's like, why are you doing this? But I'm sure, like, as you all traders know, there's just something in us that keeps on pulling us back into the market. But I did have to step away because it was devastating. It was devastating. I mean, imagine $6,000 loss. I mean, it's not like I have a lot to play with. It was pretty much I blew my accounts and even a little bit more. Anyways, so instead of quitting, which is, probably the smart thing to have done, I had kind of a breakthrough. And that's when I realized that I never actually just learned the basics. It is basically is learning how to read the market, right? How to just understand what the market is telling us. And that is what I'm going to be going over with you guys today, how I have started to use. First of all, after my breakdown, I stripped my entire chart. First of all, I went into bare, naked price action. And that's when I started to just look at trends and understanding what's going on. But then I did put in 2 indicators. I'm going to show you how and why I use these particular indicators, why they have made it so much easier for me. So first, before I go in, I have some questions here. Okay, so Jack, my e-mini course, because I do offer now my own e-mini course, which is Simplifying Day Trading. The goal of that course is you'll obviously come out with a very solid strategy that you could fully trust and the trade setups that I show you. But my goal is through the mentorship that I offer is you going on your own and you understanding why you just took that trade. A lot of times it's like, wait, they just said that I have to do it like this. But that's not true, right? It's not like this. It's because they probably have a really solid foundation and they see something and it's good for you to learn, right? So my goal is for that. So the mini course itself, the curriculum, you'll probably go through within 3 weeks. So the way the curriculum works is I give you assignments, right? Day trading is an action activity. Just like basketball, me and you could talk about basketball for hours, watch videos from days on end, but until you are out in that court shooting and me telling you if you're doing it right or wrong, you're not going to get it. And the same with trading. So the goal of the course is every single step we take, and it's like little building blocks. You send me your charts, I help you go over it. You will be surprised the amount of seasoned traders I work with that don't even understand how to spot a real support area or resistance area or a sideways market, which could devastate your account. Reversal patterns. So this is what we go through, right? And I really examine it. So the actual E-mini curriculum, probably 3 weeks, but then I work with you one-on-one for 5 months with you just sending me your charts with the different trades, what you're seeing, all of your questions. So you get to work with me 5 months, but you would be doing that anyway, but instead of just doing it on your own and kind of second guessing, you send that to me directly. Okay? So let me get started here. And if you guys have any questions, please just put them in the question box and I'm happy to help you. All right, so I work with the Ninja Trader platform. So I'm going to show you, this is right here. I am 2 hours behind Eastern time, so 7:30 a.m. is market open for me, which is 9:30 a.m. I normally don't. So this is how I kind of begin the day. So obviously I have this break. I do go into, here we go, forexfactory.com. Okay, so I guess I should go in a little bit before explaining this method and explain to you what is scalping, right? I don't know if you guys understand what a scalping strategy really is. So I'm going to just explain this to you really quickly. What is scalping? So scalping is going for a small profit in a shorter period of time, meaning so that, for instance, my trades, I normally last only between 3 to 15 minutes. 15 minutes is kind of long for me. I go in for 1 point, and when I go in for the smaller targets, my risk is a lot smaller. So I trade the E-mini futures. What you're looking at right now, this is the ES mini. I use a 610 tick chart, right? So what is ticks? Let me just give you a little example here. Okay, so if you could look at my chart, you see this number right here? It's live, right? It's live streaming. What does that mean? Means 610 transactions are happening per bar. I am in real time. So if I'm sitting in a 5-minute or a 1-minute chart, I don't see what's happening in the moment, right? It's just giving me kind of an overview of what's happening, but it's not the same. A lot of people use the volume indicator, but again, it's not live. It kind of gives you an overall average of what's happening during the day, right? Unless you're using a week chart, whatever. So this is in the moment. And here I'm looking. So now there's 95 transactions left, 69. And every time a new bar comes to life, that means 610 new transactions are happening. And as you can notice, it's moving in a pretty good way. That means that there's a lot of volatility. Sometimes you could sit through it and barely moves, especially in the night session. So you get to see that too, right? So you understand there's less people making transactions and whatnot, right? So that's kind of where, so as you can see my chart, you see this grid going on here. This is points, all right? These are points. So I go in for 1 point, 1 point trade, 1 point target, 1 point risk. It's 1 to 1. So 1 point can happen pretty quick if I'm noticing my setups happening, right? So that's the beauty of it. So it's a quick thing. And if I want to start to make a bigger profit, I don't have to wait for a larger target. I just load up on more contracts. So I'm still sitting for the same amount of time, still going for that 1 point, but instead of the one contract, which is usually $50 per point, I could go in with 10 contracts, which is now $500 per point. Hopefully that makes sense. Okay, so let's go into how I begin my day. First of all, let's go back to market open so we could kind of get an idea. And if you guys have any questions, please let me know. Let me see if I have any before I show you. Okay, Paul, I'm going to get to that in a little bit about my MACDs. For now, let me just kind of take you through my steps that I normally do. So here's Forex Factory. Okay, so here you'll see 8:30 in the morning. That's set to my time, so it's actually 10:30 in the morning. And you'll see here I have a red impact. For day trader, especially a scalper short period of time, it really makes an impact on the market if there's something going on during that time. So I normally already don't trade 20 minutes before news is coming out, and then I have to, and I usually wait another 15, 20 minutes depending on what happens in the market until the news kind of settles. I have to be honest with you, a lot of times news could really make the market go bonky. So I just learned really the hard way, stay out of news altogether. So when I see something at 10:30 in the morning, I might not even get in until around 11:15, 11:30 altogether. Why? So 9:30 in the morning, usually from 9:30 till around 9:45, 9:50, I call it the amateur hour. Obviously, it's not all the time. There is always an exception to that rule. However, what is amateur hour? It's when a lot of people, the market is people, right? So you're dealing with a lot of institutions. You're probably dealing with high frequency trading. You're also dealing with a lot of amateurs. And that is usually people that don't have a strategy and then just get in because somebody said something, or who knows what their strategy is. And that usually happens in the morning. People want to start the day, shooting. And I've noticed that it could be quite erratic or even stagnant, to be honest with you, right? So I give it some time to fully settle. Today was kind of good because it started to settle by around 9:40. However, in the back of my mind, I know that at 10:30 in the morning or 8:30 on my chart, there's going to be news, right? So I kind of just watch the market. If I see something really great, I will definitely jump in, obviously. However, I do like to be cautious because normally 15 minutes before news starts to get there, it's already in a lot of indecision going on, right? So here is approximately where I'm already completely not going in and seeing. And you can see that the market is kind of going back and forth. And look at this. Look at this drop, right? That's exactly when news came out. That is kind of unusual comparing to the behavior that was going on, right? All of a sudden it's boom, and then it went straight back up. So remember, scalping, I'm only looking for one point. So if I'm here and it goes right back up, if I want to look for an entry, I would be stopped out. So I like to really just sit down until it kind of slows down. And as you can see, it went right back to the same behavior as it did before. So I'm going to explain that behavior in just a minute. Let me just see any other questions. Okay, so I'm going to talk about my indicators. Please indicate EST or CST. Okay, so Ron, I am in Guatemala. We don't have daylight savings time, so I just like to say today I am 2 hours behind EST. In a month, I'm going to be 1 hour. So we don't actually have like a specific time zone. So today I'm 2 hours behind. So my clock that you are seeing here, it's 2 hours behind EST. Okay, so just so that you guys know that when you're seeing that, just remember. All right, so let's talk about my indicators. Okay, so as you can see, I have 3 lines going on here, and technically only this one. I put in these lines. These are not indicators, and the MACDs. All right, so what are these 3 lines? Here is my indicators, so you guys could get a good view of what my indicators look like. So here is my main indicator. This is this red line. You see this red line? This is the EMA 52 period line. Basically, it's 52 weeks of exponential moving average, right? So I use this as my main line that goes with my 6-10 chart. I am literally down to just the one chart now. I don't use any other charts. However, when I began trading, I did use 3 different time charts. One was a little bit of a shorter time frame. The other one was a little bit of a higher time frame. My shorter time frame is the 233 chart, which is right here, right? So this chart right here, sorry, hang on a sec. This is a 20 line. This is my 233. So I used to have my EMA line that was 52 period on the 233, when you translate it to the 610, it's the 20, right? So it's a lot less, right? It's a lot quicker. And then I have my 1597 chart, which is 115.97 transactions per bar. So it's a much longer time frame, right? It's literally 2.5 times more than the other one. So that's 135 period. So these are my 3 EMA lines. I actually just like to consider it as one indicator because it is just the EMA line, but I use them all strategically for my trades. I have specific trade setups that I use with them. The 233 for me, which is this purple line, it's where I go a little bit more aggressive, and I'll show you that in a minute. And then my 1597 line, I use it to work in coherence with my 610, which is this one right here. I usually use it, I call them the magic zone areas. And somebody asked about the MACDs. This is mine. I use completely universal indicators. There is nothing here that you need to buy. Every single charting platform that is worth its weight in trading salt, I guess, where you could actually really, at this point, I actually think even Google Charts, they offer all of these indicators for free. The EMA line, totally free, and the MACD universal. So what I did do, though, because MACDs usually come with 3 different looks together, I have deleted them. I just made them, I guess, transparent because they're just too much noise. I don't like the noise. I really love to simplify it and not worry about it. So these are pretty much my indicators, 2 indicators that I use, right? I do use the high-low bar. Okay, so Victor, I am always 1-to-1 profit and 1-to-1 risk. That's it. For scalping, that's usually the best way to go because you're looking for such small profits that you don't want to put too much money on the table, right? So, all right, now let's begin to analyze the market. You can't just sit down and start shooting, right? And start just being trigger happy and taking trades. That is a huge no-no, and you need to have the discipline to sit down. Even if you think you see a valid trade, you still need to look at your charts properly. So I am right now here, and I can make them a little bit smaller, right? I do like to look at the day before, simply because sometimes it does flow into the following day. So how do I start? I sit down probably 5-10 minutes before 9:30 mark, and I always know what time the news is coming, so I'm totally aware. That's through the forexfactory.com. And then I start to draw out my areas. So number one thing, please know your areas. Know your areas. I'm going to say this again and again and again. You need to know your areas, okay? All right, so what am I looking at here? So I don't want to go too far into the day before. Right now, I'm just looking at this. So I can say that I have a pretty decent support area that had a little bit of a fake out breakout, meaning that it wanted to break through. It didn't, it failed, and it continued up, right? So I've already put that in. And this way I could kind of look at it from the day before. And I also have a decent resistance area here. Okay, so it didn't continue too far out, but it's there. What I do like to do, because in the live market, when I'm here at open, I have this already drawn in, and I will draw it out even more. So I'm prepared. Why? The market has an incredible way of respecting its areas and revisiting those areas. So let me just draw really quickly what we have here. Okay, so we have, this is the resistance area. So this is a mini channel that we have going on here, right? And then we have a support area. Now, how long will the support area and resistance area last? I don't know, but all I can do is know that it's there and respect it and read it, right? So I stopped it here because it obviously broke through, right? So I would be all over looking at this particular trade, but I normally don't at such a young hour of my starting point, I guess you could say. However, this would be a really powerful breakout trade opportunity. Okay, just a really quick thing before we get a little bit deeper into this. Um, Sean, no, I used NinjaTrader. This is NinjaTrader. So Thinkorswim, because I use futures, Thinkorswim does have a futures platform. However, there's a couple of things. One, they charge almost double the amount of commissions, and I don't find it as user-friendly as NinjaTrader. So that's why. All right, so before we go in and I start to talk about the trades, one, this is a disclaimer, so please take this very seriously. I am not showing you what is the right or wrong trade. I am only showing you what the trades that I look for and why I'm finding them. I am right now going to be in sim mode. I am not going to take live trades. And even if I do, they are 100% demo because it is not my responsibility to tell you what trade to take unless you know the strategy and why I am doing that. What I am doing though right now is showing you my strategy, but because some of you are here for the first time ever and experiencing my methods, I am not responsible for any of the trades. I'm just showing you mine. So please understand that. Why am I being so strict about this? There are many, many trading rooms, and I have been in them, trading chat rooms, where I've entered even the courses that I've taken, which I wasn't 100%, but because I wasn't getting the feedback, nobody was telling me that I was doing it right or wrong. And I was getting into these trading rooms, and they're taking the trades, and I'm like, well, I don't see why that's a trade, but it must be the right one, so I'm going to jump in. I missed the trade because it was too late, so I started to chase it. What happens? I started to lose. I lost. It became a very toxic environment for me because I felt like everybody else is seeing it, I should be seeing it, then I should be taking it. So for me, it's really important for you guys to understand this is not live trading. These are just this is my strategy, and if you learn it and fully understand it and can explain it to me back and then do the trades, awesome. But right now, I'm not responsible for anyone taking live trades, okay? Really, really important. So right now I'm just showing you my way of doing this. I also will, hang on a second here, I need to move some things around on my computer. Okay, so like I said, I am in sim mode because I'm not taking any responsibility, and if I press the button, whatever. There is also this ATM strategy where you can set everything up, like your stop and your profit before you go into the trade, and once you're in it, so you already have that set up. Because a lot of times, and I know we've all been there, we don't have a risk in place, and if you don't have a risk in place, unfortunately, you will lose the farm, and that's not a cliche. Okay, so let's continue analyzing the market. Okay, and as I go along, please ask all the questions you have. All right, so here we had that resistance area and that support area, as I mentioned. And I've noticed here before the market opened that it tried to go down, it failed, right? So what happens? It just continued on. Finally, when we came into the live market, into the market hours, because of this also, you have to take into account the E-minis are open 23 hours and 45 minutes a day. Or is it 23 hours a day? So they stop only from, I think, like 4:45 or 5 o'clock, I don't remember anymore, and then reopen again, let's say 6 p.m. All of that is Eastern time. So it's a whole wave of other types of traders, usually from Asia. Europe is actually really good with our market hours, but that whole side of the world. So it's much slower, right? Because it is the S&P, it is the U.S. market more or less, but it's a lot of people from that side of the world love to trade it as well because it's such a volatile and smooth market. So it's a little bit slower. So basically in the evening hours, night hours, it did not go through, right? It tried to break through, but it didn't. So in the morning, though, when we have our open hours, it did. It finally broke through. So if I was trading live and if it was in the hour that I felt a little bit more comfortable with, because again, I'm seeing this movement and I'm seeing this break, which is awesome, but I'm still kind of in that amateur hour type of a mentality, so I just kind of want to see what happens. However, what I do want to show you guys now is my other magic, I call it the magic indicator, my MACDs. So I don't know if anybody here uses the MACDs. but they are for me, the magic indicator. Why? Because the majority of indicators lag in time, right? They lag. They're more in the past. I find that the MACDs are more in real time and could actually show you a little bit of what is happening in the future, right? Not, oh, follow the MACDs and get in every time they say something. No, but they are an incredible, integral part of my trading strategy, right? All right, so how do I use the MACDs? So here is my price action, and here are my MACDs. Right here, as you could see, is the 0 line. So what I'm seeing here is that the market just blasted through the 0 line. And when I have this much space between the 0 line and the actual MACDs, what do I know? Strength. There's strength in particular move. However, I'm still kind of seeing that it's in the ballpark of where it didn't break through before. So I don't really want to like take my trade just yet if I was going to do that. However, what I am looking at is the retracement of the MACD. You see, it's barely retracing, barely coming near my 0. So now I'm like, okay, so this is a little bit better. I'm kind of curious what's going on. And then it continues to blast through. Continues to go further and further down. The MACDs are relatively strong, and now I will definitely be looking to take a trade, okay, because now at this point it broke through. So I'm actually excited about this trade because even if I put it down here, I am now going to look at my breakout trade. Again, let's not look at the exact hour, because if I was more in the time that I do trade, this is the setup that I would be totally looking at, right? So what am I looking at? Massive area here, divergence. There is no divergence in the MACDs yet, right? So what is divergence? It's between the pivots. There is no divergence. That means there's still strength in the market. The 233 for me is usually on the first boom, either a breakout trade or I call them initial reaction trades, meaning when a new trend happens. So this is when I would get in. They're a little bit more aggressive for me. My 610 is usually where I take the more conservative trades. So this is where I would be looking to get in. And as you can see, after that, divergence starts to really take place, right? So now there's a pretty significant area here, yet it's almost straight here, right? So that's when I already know I'm not going anywhere near this market. And look at that. Remember, I'm also a scalper, so I look at really small profits, right? So I would have been totally stopped out. And look at that blast, right? Again, blasts right through. And what I like to look at is the spacing between my 1597 and my 610. I call this the magic zone area. And when I am blasting through way above the 0 line, I would start to consider this as a good trade. However, it blasted through the yellow line for me. So I'm much more cautious because there's a higher chance of it not continuing. And in this case, it continued on. But you never know, right? In the live market, you never know. So let's go more into what's happening right now. All right, before we go into what's happening right now, I need to prepare myself. So obviously today had been a pretty strong resistance area all around, right? So my resistance areas are overall about 1.5 points. This is not 100% precise because you'll have many like these little fluctuations on and off, right? So, but it's an area that is incredibly respected by the market. It's totally, look at it, it's respected here. It was a little bit higher and now it moved down. It is an area that the market really likes, right? So I need to respect that as well. And when it hit here, that means, okay, that makes sense because the market is respecting it. There's a reason. I don't care what the reason is. I just know it's being respected, right? So once I draw all of this in and I'm already prepared, I see it here. There was a support area here. So I will draw this in because when I'm in that live market, it's a pretty significant one because why? It totally changed direction of the trend, right? So for micros, for a scalper, I look for the mini trends, which I really enjoy, right? So at this point, it's already 11:30, so it's way past news. I would be completely looking into this market, all right? And then it's continued on. It totally took another little break. I don't like to draw into many areas, but I noticed this when I was in the live market. It was an interim area. It broke through. I could delete that. And now we are here, right? We have been respecting that area. And now we are kind of in a sideways movement. It's a little bit of indecision, right? It's back and forth, back and forth. At first, it's going well, and then it became really high in divergence. So it's just not worth it for me to even consider. All right, now here we are in the live market. So let me first go into some more of your questions before I go into that. So Paul, fake out breakouts are really uncommon. So they are probably 10% out of the 90% that the breakout will work out. You don't, but you do have to know exactly when the breakout can happen. And you know what? This is trading. You will be taking valid trades that can get lost, that will lose, right? And that's completely normal, right? So you have to prepare yourself for that. So you don't really know when a fake out breakout will happen. However, the second it happens, don't get into any more trades. So let me go back to here because that's a really important thing that we should talk about. And let me just, all right. So here is the fake out breakout, right? So it's been going down and finally broke out. Looks fantastic. Well, actually here it doesn't look fantastic for me because there's a lot of divergence. That could be a little bit of an indicator. It's usually not that much of an indicator. Usually you'll just get in. So you pretend you get in here and you have a loss. Totally understandable, valid trade. But you know what a lot of traders do? They go in again. So this is something I really need to discuss with you guys. These are called consolidation areas, and they are called transition areas or whatever you want to call it. Basically, they are indecision areas, right? So let me just see a good one here. So because I am more of a scalper, for instance, here, let's do this. So I am in this market. I'm seeing that it's going up. I mean, this is definitely, it's a little bit, it's not my favorite type of support area. I think that will just be a little messy. If I start to see it hit back again, I will go here. So here it is, right? The live market, and it's going up. And then I'm seeing the MACDs. They're huge. They're gorgeous. They're really high up. So I probably would be looking to get into a trade here. It never comes close enough, so I probably wouldn't be filled. Another very important, I know I'm kind of throwing a lot of things at you guys. No fills. I want to tell you about no fills. You guys know what no fills are? Does anybody know what a no fill is? No? All right. You know when you guys get frustrated because here, let me do an example here. This is complete example. I don't want you to think that I'm going into this trade because it is valid. So here's my order waiting. And I go in here. Oh, I love this trade. I want to get in here. Let's pretend I'm putting it here. And guess what? The market goes all the way here and it does not fill me. It goes to the place where I have my order waiting. I love it. And instead, it bounces off, does not fill me, and then goes in my direction. Let me tell you, it's frustrating. It sucks. But guess what? It happens. It happens all the time. You know what? This one doesn't suck as bad as when you are in the trade and you have your target profit there. It bounces off and sometimes it can hit it several times and doesn't fill you on your target profit when you're in and instead retraces back and stops you out. It sucks. It is what it is though. It's gonna happen. So please remember that. Okay. So no fills happen. It's just the way we roll, right? Okay, so it does not matter. Sherry, I do not have any discrimination towards shorts or longs. So let's say here I am. Okay, this, by the way, is one of my absolute favorite setups. Okay, I know that in this case it hit this yellow line, but I would still be looking at it because there's zero divergence, massive strength. I call this the magic zone trade, right? So I am selling. I'm going in as a short, right? So I would be right here waiting for it to happen. As you can see, it did not fill me. It would have sucked, but it is the way it is. I will not be chasing this trade. I'll just let it go because there's a gazillion other trades waiting to be had. Never chase a trade, people. Never, ever. I used to chase trades all the time. It killed me. It was just a horrible thing. All right, so this is a sell. That means I'm shorting, all right? Well, what if I want to go in long? Let's pretend I'm here. So I open up my window here and I press buy, right? Well, actually right now it's not showing me a buy limit because, well, because the market is going low, right? So, but here, oh, that's a good example right here. Buy limit. If I think the market is going to go up, I can do that. I never take just like that. I always go from here or from here. So I always have my target area, my shooting area. So let's look at this market right now. Why I do not even care at all about this market. Look at that line and look at my MACDs. Massive divergence. I do not care. I don't know what's about to happen. It could go for another 100,000 points down, but all I know that it's already telling me something is about to change. I'm sitting it out. I love divergence. I'm very conservative when it comes to that. I am not going to even concern myself with the market. And you know what happens when nothing's going on? Put on some music, dance, go get some water. There are three very important things that you have to remember. Let me tell you, staying out is probably the hardest one to do, right? So look at this. If I would be looking to enter on this going further down, I wouldn't even think about it. I've learned my lesson the hard way. Not going to happen for me. So I am in these three positions right now. I am staying out. So to be honest with you, normally what I would do is just put on some music, hang out with my doggies. I'm just staying out. This is not worth it for me. This divergence is simply not worth it for me. Here, in the live market, I realize that this is also a resistance area, but also it's not a huge divergence because it is going down, but it's a lot stronger, right? So I would take that into account just the same. So at the moment, it's a sitting game. Also, to be honest with you guys, it's 1 p.m. It's lunchtime. Lunchtime is not great time to trade. So let me go into a little other thing that I want to discuss. First, let me check out your questions. So Victor, when you say volatile, I like volume. I like movement, right? Because volatile sometimes could have a negative connotation that it goes back and forth, like almost erratic and choppy. So I like movement and flow. It doesn't have to necessarily be only in one direction. You could have many trends just the same. But I do like it when there's movement because look what happened now. Let me just get out of here. Look what happened now. It's much slower than when we first began the presentation, right? Much slower. I mean, I could even read the numbers. It's stuck at 223 right now. It's lunchtime. So I am usually not in this time period. Okay, let me go into here. Sessions to trade. We have the morning session, which is 9:30 a.m. till around noon Eastern. Then you take a break. Then you have the afternoon session, which is usually between, for me, it's around 1:30 p.m. to 3:30 p.m. Eastern. Why 3:30? because that's amateur time. 3:30 to 4, I personally do not want to be anywhere near there. Why? A lot of traders at this point are freaking out. They want to get whatever money they can. They just want to cash out, or they're scared about the money they're losing. They're cashing out. The emotional decisions are much stronger from 3:34. Personally, I do not go anywhere near there. At that point, I should be completely out, right? So hang on one second. Let me just see here. Oh, I'm so sorry. I'm way past my time. For some reason, I thought I am done at 1:15. So everybody, I'm so sorry. I just want to close off really, really, really fast. Again, I really apologize. I do have a boot camp that I am selling, and it is a special for you guys for right now, 50% off. And I go over all of this with you live for $98. So please, also you can contact me on thetraderchick.com, and the boot camp is thetraderchick.com/bootcamp. So sorry, Teddy. For some reason, I was sure it was at 1:15. I really love this, guys, and I am going to be starting a live chat room. So you can contact me there telling me I want live chat room. It's going to happen in the next couple of months. So I am going to be giving a special deal for everyone who comes in early. So thetraderchick.com/bootcamp. Thank you again, and thanks, Teddy, so much, and I apologize for going over. All right.
That's fine. That's fine, Marina.
Bye.